Let's bring our panel back here in studio into the conversation. They've had a chance to digest some of the news. Joining us here in studio, Francis Donald, the head of macroeconomic strategy at Manulife Asset Management, Sean Speer, the Monk Senior Fellow for Fiscal Policy at Macdonald-Laurier Institute, and Nicole Verkint, the CEO of OMX. You were talking earlier, Nicole, about that idea on the housing front. After we've tried to cool things down, does the move that we saw today start to heat things up again? But what stood out to you from everything we've just learned about over the last 15 minutes or so?
Well, I've been spending a lot of time. I'm co-chairing a task force on basically business competitiveness with the BCC, and I am upset there's not a lot here for that. And I think that they're really trying to appeal to middle-class Canadians, and I think that we can't forget that there's a real connection there. So I'm a little upset that we're not seeing anything there. I like the line in the Bloomberg article that I've just been handed. Justin Trudeau got a windfall and he spent it. And that seems a bit like the punchline. But it's definitely appealing to millennials. It's too bad they don't have online voting yet so that they can ratchet it up more millennial votes. But this first-time homeowner, this is significant. I know a lot of people that work in my company that struggle and they won't be able to buy a home, and this could make the difference for them. So there's some things in here that are quite significant.
Well, while we might not have anticipated that particular measure in that form, there were a lot of people speculating, Sean Speer, that you were going to see, for example, if you wanted to take RSP money and put it towards that home purchase and not have tax consequences, that amount could be increased. And they did do that.
That's right. In fact, it's easy to forget that was a commitment the Liberal Party made in the 2015 election campaign. So it's been a bit delayed, I think, in part because the attention focused instead after the election on trying to cool the market. But this is, in fact, a delayed fulfillment of a promise. I think the headline for me, John, is in the current fiscal year, the deficit is down to about $15 billion, and it's jumping up again back to $20 billion next year in 1920. So instead of moving down as the government had planned, we seem to be moving back up. And as I said earlier, just as the economy seems to be softening, this, I think, in my mind, is evidence of a structural deficit. And it seems to me Mr. Morneau, in the days ahead, as he tries to sell his budget, both the Main Street and Bay Street, is going to have to explain why the deficit is moving up instead of down.
So that idea heading into this federal budget that Ottawa saw the fiscal deficit shrinking each year steadily towards, I think, like $11.5 billion by, call it, 2024. I would imagine you'd be a little skeptical of being able to meet that kind of time frame.
Well, absolutely. The fact that it's jumping in the year ahead, I think, is ought to be worrying for people, especially, as I say, given that it's now, I think, clearly a structural deficit. And the fact is, as Nicole says, faced with windfall revenue, the government has decided to delve back into deficit. I think both for substantive reasons, that is to say they want to spend on some of their voter groups, but I also think they want to set up an election campaign where they're talking about investing public resources, even if they're deficit financed, and accusing the opposition of wanting to advance an austerity plan. And I guess it'll be up to Canadians to make a judgment about that.
Francis, I do wonder now we're in the, do you spend or do you cut taxes, and what helps the economy? I guess longer term we'll know ultimately what's the winning strategy. But would you agree with what Sean's saying, that by taking the windfall and spending it, it's going to set a different message on what the Liberals are about heading into the election campaign versus what the Conservatives might be doing with any fresh cash coming into Ottawa?
John, all I can think is hello housing bubble. It clearly was well-meaning to try to help first-time homebuyers into this market, but I do not believe the long-term health of this housing market is going to benefit from the incremental demand. And in particular, as I'm running through these numbers that have been handed to me, they're talking about, an example of a $400,000 condo in Toronto. Please find me one. I will buy it if you can find it for me. We're talking about $1 million starter homes, and the numbers that we're seeing here are not, in my view, enough to really sway the dial there. Where they will move the dial is through the rest of Canada, where we were already seeing price pressures mount, where we were already seeing the Bank of Canada saying, listen, we already have two big housing bubbles, let's not inflate the rest of them. This, to me, may be problematic. Now, in the short run, it will indeed help growth. It may even raise some residential investment numbers. It may help economists boost. It may even have the Bank of Canada just turn a little bit more hawkish than what we've seen. Over the long run, however, I worry that this type of program, particularly if it's extended over several years, is only going to make some of these housing problems worse.
All right, Nicole, you're back into the conversation here. You've been waiting to say something.
It just the $8 billion in net new spending, it just felt like a bit of a spending spree. And it feels like, and Sean might be the expert here more, that he's taking some moves from the NDP and he's moving things a bit more to the left to say this is the kind of government that we are. And it really feels like a big number.
Sean?
Well, I think the key here is, I think, twofold. We have a government that's decided that the politics are on its side in terms of targeting the voter groups that we discussed at the outset, and that breaking its promise on deficits and debt is manageable for them. And I suppose we'll wait to see. The one thing that we haven't talked about, John, and which I want to look into once we have had a chance, is remember the federal carbon tax will take effect in provinces come April 1st. So it's been to date a sort of abstract, esoteric debate. This budget, no doubt, will provide more information about the revenue estimates for the carbon tax and the government's plan to return it in those provinces. And I think that in and of itself is a piece of the puzzle that will no doubt have important economic implications, but obviously important political ones too as we approach the next election.
And just to tie some of those themes together, I mean, as part of some of that infrastructure spending that they were talking about, they were putting money towards energy-efficient infrastructure-related spending. I think coming into this budget, there was, a lot of the talk was about things like electric vehicle tax breaks to offset some of that concern that we've seen from small businesses in different provinces over how much of the carbon tax they can pass on in running their business right now.
So I'll take the other side of my co-panelists here. I actually think these deficits, while in their flat-out number look very large in percentage of GDP terms, they're still going to satisfy most economists, most credit agencies, most markets' understanding of what's sustainable over time. What I think might catch a little bit more of attention is not the total number, but what it's being spent on. If you ask me what are the two strongest parts of the Canadian economy right now, I would say housing and the job market. The job market is at a 40-year strength right now. This is not the area that's problematic.
Can we say that the jobs strength, I mean, at the end of the day, if the jobs market is strong, there are a lot of people that are paying taxes. Is that, I mean, where does the windfall come from? Can we point to a strong jobs market as one of the reasons why the Liberal government had money here that they felt they could spend?
Strong economy, but also it doesn't look like, and we'll have to go through the numbers, that they used their contingency reserve. So every year the budget will put in about $3 billion worth of kind of rainy day oops money that goes in there. They didn't need to use that this year, so some of that is coming through there with the budgetary windfall. So they did spend on jobs and housing, which I don't think a lot of people felt were an absolute necessity right now, but that money that's put aside for municipalities and infrastructure spending, that's important. That's about long-term growth potential. That's about allowing our potential GDP to rise over time. That's something that will catch a lot of economists, I think, and economists will be quite happy with that.